Capital Management manages $101 billion of investments on behalf of some of the biggest global institutions, about 65 sovereign wealth funds, about 400 endowments, 350 corporations. But towering over Oaktree is its co-founder and co-chairman, Howard Stanley Marks. He started Oaktree in 1995 with some colleagues from TCW with $5 billion. Today, $101 billion. Prolific writer, and his memos to investors have a worldwide following. In 2015, Forbes ranked him as the 338th richest man in the United States, net worth $1.95 billion. I spoke with him yesterday. He's on a visit to India. And here's a slice of that conversation on his views on India, emerging markets, and more importantly, the US market outlook.
I've been impressed with the people I've met here, and I'm impressed with the wonders of the country and the qualities of the people. Okay. So I think we'll take a strong look at it.
Okay. Well, one of the areas where India at the moment is desperately looking for money, and I'm sure your audience would have told you that earlier today, is distressed assets or special funds, special situation funds. There are about probably $8 trillion of bad debt, which is desperately looking for some capital. Is that an area of interest? Did you discuss that with anyone?
I haven't had specific discussions, but I mean, distressed debt is one of Oaktree's fortes, and it's a place where we think we have expertise and can add value. I guess I would say if we're going to get involved with India, which I think we will, there's a better than average chance that it will include distressed debt.
You have spoken about China in your memos.
Yes.
Do you think that it's going to be an orderly shift? Will China, I mean, it seems to be showing more growth than it did exactly 1 year ago when we all worried about recession. It's an important buyer of commodities. And therefore, are you just confident that its hiccup is over and China will show modest growth?
Well, of course, it has continued to show modest. According to the reports, it never didn't show modest growth. I believe that the older developed markets are senior citizens. The U.S. is a mature adult. I think that the emerging markets like India and China are adolescents, which means two things. Number one, their best decades are ahead of them. And number two, life will be chaotic. I don't know if you've ever raised a teenager, but I have.
Yes, I have.
And life can be chaotic. And I think that that's the way it will be for China and India and the others. There will be pronounced ups and downs, more than you see in the developed world, but with a positive skew.
Basically, would you say that the United States and the global economy can reasonably expect better growth in 2017 than 2018? Are factors, arranging themselves that way?
I'm not an economist, and I don't believe in economists, as you know.
Yes, I saw a radio memo.
But the U.S. economy does seem to be gathering strength, and from a low level. You know, this has been the weakest recovery from a recession in many, many years. So it does seem to be gathering strength, and there is the possibility that the administration will do things that are helpful. So there's a chance that growth in 18 will be better than 17.
Well, another impact of President Trump-led expectations has been, of course, this I don't know if you want to call it euphoria in the U.S. markets. You've written several times about the extremes. Is the U.S. market in extreme terrain at all?
It's close. I mean, the U.S. stock market, number one, it has had a very strong spurt on the back of the election results. And as I indicated, we don't really know what the import of Trump administration actions will be. So I think they're giving him the benefit of the doubt. And of course, if that turns out to be a mistake, people will be made unhappy. If you look at the prices of stocks, they are in the top few percentile of valuation observations over the many years. So I think if you conclude that stocks are, number one, highly valued, and number two, based on optimism, I think you certainly would have to admit that there's room for disappointment, and when there's disappointment, there's loss. The price of every asset has been pushed up by the suppression of interest rates. You know, you look at stocks today and people say, stocks are fairly priced given that interest rates are so low. And that they are. But that raises the question of, will interest rates stay low? What will happen to stock prices if interest rates rise?